Updated 12 minutes ago. Breaking news. Electronic Arts. You know them. You love them. Madden, FC, Dragon Age Veilguard, also Split Fiction, It Takes Two, all of that stuff. They are seeing their stock jump 15% on a report that says that the company is near completing a $50 billion deal to go private. What? Okay, so what's happening is that a report by the Wall Street Journal, so reputable, posted that the video game company is nearing a roughly $50 billion deal to go private. The deal would likely be the largest leverage buyout of all time, according to the journal. Investors include Saudi Arabia's Public Investment Fund, and Silver Lake could announce the deal as soon as next week. Shares of the company jumped 15%, and that's basically because they're valuing the company at $50 billion. Investors include Saudi Arabia's Public Investment Fund, just read that. The deal would be the largest leveraged buyout, surpassing the agreement to take TXU Energy private for about $45 billion in 2007. A leveraged buyout, or LBO, is when debt is predominantly used for an acquisition, a tactic traditionally used by private equity firms or activists. EA makes popular games like The Sims, Madden NFL, FC, formerly known as FIFA. And after Friday's gains, the stock is up 32% for the year, and they have not responded to requests for comment. Very, very interesting. Very, very interesting. It's kind of what I've expected Ubisoft to try to do, but they've not managed it, obviously. But this would be very, very interesting if they're able to actually pull this off. As you can see, so if the deal and the report is true that they're going to be priced at $50 billion, you'll notice that right now the market cap is sitting at $47.95 billion. That's interesting because typically whenever you try to buy out a company, you need to offer more than the stock is currently trading for, right? If you have something and it's worth 10, if I offer you 10, you're probably not going to be that excited about selling it. A lot of people won't. But if I offer you 15, you're probably going to be more likely. 20, you're definitely going to be more likely. And so as you can see, the stock was trading down at like 167, 173, but it's jumped 23 bucks or roughly 13%. And that puts the market cap in that like 47, 48 billion range. The difference, the gap between those is basically the risk. So if the risk or if the difference is $2 billion, that's the difference between what the actual offering price is going to be versus where the market is pricing it at. And that's literally just concern over it not going through, regulatory pressures. It's the same reason why, like, when Microsoft was offering, I forget what the exact dollar amount was that they offered for Activision Blizzard King, it converted to, just about 70 billion. But if they offered the equivalent of like $100 a share for the company, you might see the stock only trade at like 90. And that's because there's $10 worth of risk, right? There's $10 worth of uncertainty of whether it'll be approved, whether regulators will let it happen, or this or that. Going private is typically much, much easier than like acquiring some massive, massive company by another massive, massive company. So it's very interesting. As for like impact of this, what this probably actually does. So there's advantages and disadvantages to being public and private. When you're public, it means that you can issue stock and sell it to investors for cash. And that allows you to expand, to grow, to spend that money on things like opening new studios or investing in infrastructure, that type of thing. The downside is that then you are obligated to report financials every quarter. And so you are constantly caught in this like short-term mindset, right? Because every 3 months you have to update everybody and you have to grow and you have to find new ways to evolve and change and shift and move. And that can be very, very frustrating because it means that as an executive team, you can't really try to do things for long-term benefit. You have to constantly be worried about short-term gains and profits, even if that's not for the overall best of the company, because you have to report it. Otherwise your stock will crash, right? And then beyond that, there's also all sorts of other difficulties. When you're public, it means that there's lots of reports, there's lots of eyes on you. You don't have total control because you still are having to go to the board of directors and get things approved from shareholders. Whereas when you go private, you might only have 4 or 5 shareholders or stakeholders within the company, a lot more stakeholders, but you only have like 4 or 5 shareholders of the company that you're dealing with versus millions in the case of being public. So there's plenty of advantages there. As for why they would want to go private right now, on the one hand, if they got approached by Saudi investment fund and they were talking about offering $50 billion, I mean, Earlier today, they were trading at significantly less than that. Like they were not valued anywhere close to that. So, yeah, if they have 250 million shares outstanding, and earlier today they were trading, I'll just say 170. So they were valued at like $42 billion earlier today. And then after this news, it shoots up to being worth roughly 48 billion, or 50 if the deal goes through. That's just good for shareholders. So to a certain extent, they'd have to entertain that. If they could add 14% of shareholder value by accepting this deal, that's a component of it. Because your ultimate obligation as an executive at a company is to serve the best interests of the shareholders. And that means if you find a way to increase their value by 14%, you are obligated by fiduciary duty to see that through, especially if you think it's the best opportunity. As for why Saudi Arabia's investment fund would be interested in EA, I imagine it's that they're just trying to throw money wherever they can. They've invested in other projects as well, like Ubisoft. I think this is the same fund that gave them a bunch of money to fund the DLC for AC Mirage. I think that's the same one. So I'm sure that's a component of it. They just want a piece of the gaming pie. I know Saudi Arabia has also expressed a lot of interest in football. British football, FC in general could be a reason that they're interested in there. They're trying to buy the PGA Tour, all sorts of stuff. Yeah, they're trying to just get their hands on a lot of different pots. But whether this would be good or bad, honestly, I think for video game companies, less pressure from shareholders is probably good. Because part of the excessive over monetization of all these games is because they have to report quarterly revenue and profit increases constantly. So they have to find new ways to squeeze blood out of the rock. And in this case, I think if you are free from that obligation, you have freedom to make longer term investments that shareholders probably would not be that happy about. So it frees you up a little bit to play the long game. So I think that that's a piece of it. As for other components of it, I mean, I'm sure there's concerns over like how they'd have to kind of, I don't even know how they would censor themselves or what Saudi Arabia would be worried about in EA's types of games. But there's been concerns over that because, of course, Saudi Arabia has very strict guidelines on what is and isn't allowed. But I don't know how that would affect like a football game or a soccer game. So overall, I mean, it's very, very interesting. It's pretty shocking. And going private is absolutely wild. Yeah, Electronic Arts trading halted, volatility trading pause. Absolutely crazy. Take-Two Interactive has also jumped 4% after this happened. They lifted the trading halt after it jumped 15% and settled down there. That's absolutely crazy. Absolutely crazy. You can see 52-week range, their low was 115. Now they're at 192. Absolutely wild. Golly. I will say, whatever you say about EA, it is a very well-maintained company. I mean, seriously, they're sitting at like gross margin of 79%. What? Jesus. So they're doing quite well. They're doing quite well. So very, very interesting. I'll have to dig into it a little bit more and see. I'll have to read the Wall Street Journal report and see what all of that says. Verifying device. They have it locked behind a paywall, of course, but absolutely crazy. And the other component of this that's important to note, it's a leveraged buyout. So they're not paying cash. Like a lot of companies will pay cash or stock, cash equivalents or whatever, to buy out companies. They are offering to buy it out basically on a loan, which is not crazy. I mean, that happens all the time. But that is very interesting. So a group of investors, including private equity firm Silver Lake, they're a big company. Silver Lake, the investment firm, the private equity firm. They have roughly $104 billion of assets under management. Like they're not that huge. Again, this is for a $50 billion takeover deal. So they'd be taking out like a solid 10% increase, 20% increase. It's absolutely crazy, but they've made a lot of crazy investments. Like, look at this. They've they entered negotiations to invest over $1 billion in an Indian retail company. They wanted a 33% stake of Australian professional leagues. They wanted to invest in the A-League Women, A-League Youth affiliate holdings, roughly $300 million. The firm raised $20 billion for its seventh fund. Silver Lake Partners 7. It's pretty ridiculous, pretty crazy, but they must see something. They see something as an opportunity, and it could just be, at the end of the day, like, these companies think that video games are growing and expanding and they want a piece of that pie, but it is too expensive nowadays to try and build your own gaming behemoth publisher. So they're just trying to buy one before Microsoft does. It could just come down to that, where they're like, BioWare or Microsoft's going to buy them out, so let's get them before they can. Maybe that's what it is. What would them going private affect monetization? It would lessen the pressure. It does not mean that they will magically get rid of crazy monetization in their sports games. I don't think they would get rid of it, but it lowers the pressure to keep pushing, because when you're publicly traded, numbers must go up. Numbers must go up. That is all you need to know. When you're privately held, the numbers can sometimes go down, if it means in the future they go up even more. But a lot of the time with publicly traded companies, because you're reporting quarterly, it doesn't work. And there's been a lot of finance PhDs and economists and very, very smart people, way smarter than me for sure, who have said for years that corporate America should stop reporting financials every 3 months, that they should break it down into like every 6 months, or like, you know, twice a year they report financials, or maybe for some select industries they can do it once a year, just so it lowers the pressure on management to do quarterly improvements, but to rather look long term. I think even Warren Buffett hated the idea of quarterly finance reporting. So it's going to be interesting. It's going to be very interesting if this goes through, but that's absolutely crazy. I did not have that on my bingo card for today. Absolutely crazy. Overall, though, based on my gut reaction, I think that this is probably a good thing. Probably. I think it'll probably help. As for what does this mean for BioWare? I mean, if current EA leadership thinks that there's an opportunity with Mass Effect, I don't think that's going to change with these new buyers. And the new buyers, I mean, maybe they're going to come in, because private equity does do this. They come in, they buy it, they gut it, they take the debt, they stack it with all of their other debt, and then they let the company burn and die. But other times they buy out the company because they think there's an opportunity. So it could be that they come in, they buy it, and then they just crank up the monetization like crazy. And that's how they do it. That's possible. But a lot of the other companies that have received massive investments from the Saudi investment fund, they are very long-term in terms of their approach. They do not tend to be super short-term focused. And based on my understanding of EA's financials, which is not vast, but they don't hold a ton of debt, which makes me think that they're not just trying to go and like tax loss farm, which is something you can do with some companies where you're like, hey, we want to buy out this company that has a lot of losses or a lot of debt, and we're going to use them to basically write off profits we have elsewhere to save money on the tax bill, but it might kill this company in the process, but that's fine. I don't think that that's what they're doing, but I could be wrong. I'll have to dig into it more. Haven't Saudi also invested in Ubisoft? Yeah, like I said, I think this is the same fund that invested and gave them money to do the extra DLC for AC Mirage. I think that's the same firm, same investment fund. So it's very interesting. Very interesting. Again, I did not see this coming, so I'm gonna have to do some reading and digging on it. Maybe I do another segment on Monday and we go over the whole thing, because that's very interesting. Very, very interesting. He took my thing. Red flag.